Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check? In YouTube and the Bookmap Discord TraderLab community. Thanks, Marty. How we doing in YouTube? Thanks, Alan. Well, good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Quite an interesting market. It's been quite volatile, a lot of range, and if you're having any kind of difficulty in trying to figure out what's going on, don't be surprised. The thing about trading, and we'll get into this in a moment, is to understand you need to be flexible. You absolutely have to stay in alignment with the market. And in the TraderLab, we have processes for doing this. And hopefully I'll be able to have the time to get into them today to help you understand it. Our business as day traders, if that's indeed what you do, is to be flexible, not opinionated, open-minded. And my reference to that in the streams is I always say I'm clueless. And I just want to say clueless doesn't mean ignorant. What it means is I don't walk in or trade with a rigid opinion. What I do is I stay open-minded. The clueless statement is to keep me from becoming myopic and filtering what is actually in front of me. And the mind tends to do that. And if it happens to you, it's really a function of rigidity. And one of the things about trading is that it's a continually price discovery mechanism and valuation process, in my opinion. And what happens here is there are times when what seems somewhat obvious, the participants who actually determine these valuations have a change of mind, or it gets too extreme, or whatever it is. So we'll get into that, and that's really the basis of this stream, is about understanding market mechanics, how it works, why it does what it does, and then how to integrate a high-tier order flow tool like Bookmap into the equation for actually interacting in a term time frame that you can, looking at order flow phenomena. So we'll get into that. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. If I get into real time, we will discuss it. Let's get right into the market. RTH open. Now, what I'm going to be doing, as I do every time in the stream, and if you're new here in YouTube, welcome and thanks for visiting TraderLab today. What I do is I discuss structured trades. Now, structured trades are based on 60 PDFs that are available to everyone at no cost in the Bookmap Discord TraderLab community, as well as the community and a library of webinars on this process. My objective here is to show you market mechanics. Now, the thing about TraderLab is there's no right or wrong way, if you will, to trade, but there are maybe plans that are better than others. The thing about it is you need a plan that gives you a statistical edge. And since anytime we interact with the other participants in the market, there's actually a random outcome. What we need to be thinking about is how casinos operate and how they play their games, and that over a random interaction with the gamblers or the other participants, if you will, they, over a large sample size, extract dollars from the gamblers. How can they do that? Well, the cards coming out of the deck are random. Gamblers play the cards randomly, and gamblers walk out with cash. So how do they build casinos? Bigger casinos give you the cocktails buffet and the tickets to Adele. It's because they only play games with an edge. The business of trading is really the same thing. It's a matter of which side of the table do you want to sit on. Now, here's the thing about being a gambler. If you don't have a structured or vetted business plan with an edge, you will have winnings. This is the fallacy of gambling. Gamblers win. And for us, and I call it Trader Groundhog Day, we have winning trades using certain processes, whether it's indicators, a dartboard, doesn't matter, right? Everybody wins sometimes. The thing is, over a large sample size, are you a loser or a winner? That's what you have to determine. Not the last trade, not the last 5 trades, the last 30 trades or 50 trades with the exact same anchored inputs. If you're not doing that, you can't replicate it, you can't measure it, and you're sitting with the gamblers. And be sure to get the cocktails. Again, just an opinion. And based on almost 45 years of trading, that might be worth something too, but who knows? So let's look at the first trade. So it was wild. ETH wild. So today, coming in, here's what we know. I'm going to show you, just to give you a couple of things. I'm not going to go into the stats. Those are all available in the Bookmap Discord TraderLab community. You can download that with the 60 PDFs and review the library of webinars so you see what's going on here. This was the retail price in the ETH. This has a high probability of getting taken out. The ETH high has a high probability of getting taken out. This is a target below. This is a target below. So we got target here, target here, target here. And if you really want to get nutty, let me see where it is. Let me just check. Now, the probability of taking out the overnight high and overnight low is not high. So but I'm going to show you the first trade. Let me just go into a few other items here if I can find them. Okay. And then we have yesterday's high over here, settlement. All these have statistical probabilities. Okay. So let's get started. Let me just look a little further out here. Oh, yeah. And this is a high volume node in a higher time frame. It's a potential target. So this is on the map. This is on the map. Yesterday's high. Why? Stops. We like that. Settlement. So those are targets. Now nobody knows. So when we open, now this is the first trade in the TraderLab, and it is an aggressive trade. And I always suggest that traders don't do this. Why? Because it's timely. It takes unconscious competence and a high degree, as I say, of competence and the ability to react quickly. The problem with the opening trade is speed. And it's very easy to get plundered in the opening trade. So I always suggest in TraderLab that developing traders don't trade it. Now, there are many traders who will do that anyway. And of course, I would say a high percentage of them, extremely high percentage of them, can put themselves out of the business if they don't heed the advice. And FOMO being what it is, many traders are going to do everything they can for the action. We're not in this business for action. We're in this business for opportunity, taking intelligent risk, and putting the odds or edge on our side. And if that's not how you experience this business, then you're really just playing a video game. And that's, to me, that's not the purpose of being in this business if you're interested in a career. First trade, RTH open. Liquidity comes in the book. Market trades here. Now, I'm taking you into minutia. This is a structured trade. Now, there's two things you got to be aware of. One is, wherever this low is, if we rotate whatever it is, and we don't know what it's going to do, under the opening swing, wherever it is, there's going to be stops. So you got to, and that's part of the opening trade. This is the opening trade, and I call it VPOC migration. Now, there's other ways I can define it, but for the TraderLab, I try to keep things very orderly and structured. Now, remember, the market's random. We have to be consistent and anchored. So exactly the same way. Blackjack is 7 cards. They play it the same way. So we need to have our trades the same way. Let's look now. First trades. By the way, I can't see your questions. Post them in the chat, and I'll do my best to get back. And remember, the TraderLab is a no-cost community. It's open to everybody. Doesn't matter what your methodology is. Doesn't matter what you do. The idea of TraderLab is that you can leverage, or we can leverage, the collective experience of the participants in the TraderLab, discuss, debate, share, leverage. And the idea is that we all get better. Strength in numbers, So liquidity comes in the book. Market moves higher. This is subtle. This is what 1.6 ticks. That's why this is, you got to be, very proficient. Sellers are here. I see absorption. This seller is absorbed. So here I have a seller. This is minutia, guys, and seller. If I get buying above here, then these guys were absorbed, and there's the absorption. So right here, I have sellers. This is order flow. Here's the delta. Okay. And I know it can go either way. Very excited. So I break high. This shows me here. Let me go back and say it again. Sellers are at the moment, and this can change in a heartbeat, are absorbed and stuck. The market moves away. Watch. VPOC migration. This is the language of the market. Now, I always like to say I don't use any indicators. And the reason I like to say that is most of us use indicators as translators. Google Translate, Indicator Translate. And the market is not driven by your indicators. Your indicators are translators, and they are not context sensitive. What are they going to do? Tell you to get short here, tell you to get long here, don't know, conflict, what do you do? In TraderLab, it's about the language of trading. If you can understand and speak market, you can then align indicators if you understand what's happening right here. If you don't know what's happening right here, you might be looking to get short. I don't know, So I'm going to label this. I call it a variable high volume node. And what this is high volume. And the way the market works is it's an auction. Now, this is auction market theory. What is auctioning? Auctioning is shopping. You ever, think of a cattle auction, which I'm sure not too many of you have visited, or try a car auction. It's what's too low, what's too high. Well, the volume represents, if you went to a store, which is a slow moving auction, if a price becomes too low and the buyers and sellers interacted here and then we leave it, it might, underline, suggest you can't buy it here anymore because now the price has moved higher and now the volume is being done up here. So that means, and I'm saying maybe because it's all you got in this business is maybe this is too low. So now new retail price. If this is too low, then, and if we can push off of this and hold this, this is support now, this is resistance. And remember, opening swing low, I can dip under here, grab stops, and then come up. So I know that's why the opening trade is a bit of a advanced process. Watch. This is too low. It's my variable high volume node. Let's see what we have. Again, absorption, sellers stuck. What happens here? Buyers stuck. They are absorbed. I get my sellers. Sellers are now here. Watch. So what right here, it's maybe it's all over and we're going to do the Acapulco cliff dive. It could go either way. This is a high probability target. This is a high probability target. This is a high probability. Yesterday settled. So I've got two possibilities. Well, right now, I'm seeing this. And if I hold this and maybe only pop out under here, and these guys who are trapped, I get more trapped sellers down here, or sell stops, which are also sellers, and nothing follow through. It's just a liquidity grab and then north. That's what I know. Let's see what happens. Variable high volume node. Remember, too low. Absorption. So this is a structured trade in the TraderLab. What makes it work? And guys, if you find this interesting, come to TraderLab. These streams are available exclusively to TraderLab participants. Why did this trade work? Well, first of all, it's random. So let's all accept that. Why did it work? I want you to think about it. Retail in the shopping experience. Sorry, S&Ps, you can't buy them here. Now, we're not sure, But we have this absorption, and these sellers are trapped. There's the delta. This was too low. I have a new retail price. But what might the market do? This is called trading in fractals. If this price in the store, and maybe there's a couple of S&Ps left in the shelf. You ever look back in the back of the shelf and maybe there's something from the old price? I know. There's my sellers. And what if I can't get below here, and I could still come out here and come back, I mean, all things are possible, then it's telling me these sellers are absorbed. Same behavior is here. Does this make sense? Once I break above, too low, I break above, test from here. Now this is too low. Hasta la vista. Thanks for visiting. See you later. The long. Is everybody tracking? If I'm up in YouTube, is this making sense? This is trading at fractals. This is auction market theory. So we take a long. Now, first target for scaling is the ETH high and this. So, because these are high probability. Now what? Now, I'm thinking, I don't have any expectations because I'm clueless. Remember? Top of the stream. Clueless. What's going on? Uh-oh. What is going on? VPOC migration. What does it say? Remember, language. You can learn this, by the way. And what would that do for you? It would allow you to be able to understand how the market's developing. Now, if you have indicators, where would it get you long? Well, if I can get long here or in here would have stopped here, or here would have stopped here, I'm okay with that. What do you think? And get risk neutral up here. What do you think about that? Now, I don't know. So now it's trailing a stop. Let's look a little further. Notice what's in the book. Stack liquidity. Now, I'm going to take you a little further if you want, or else I can broaden this out. I see absorption here. Absorption. Selling iceberg. That's what this is. This is the limit order book. These guys are throwing their orders in here. We see them in Bookmap. This is the beauty of the heat map. But what is happening? The icebergs are selling and the buyers are absorbing this selling. And when you see absorption, look at the difference. Seller buying absorption. See you later. What about here? Selling absorption. Buyer overpowers it. Notice the difference. I'm now above the absorption. If I hold this level in this area, then these guys are under the bus. Or it's just an iceberg that's laying off whatever for whatever reason, and the buyers are going, I gotta have an S&P. I'll pay for it. So let's watch. I hit this. Now, the thing about trading, of course, is we don't know. But here's something I know. What's above yesterday's high? Buy stops. If you're sitting short, do a stomach check. How would you, quote, feel? Feelings, emotional state. Watch. Absorption. Icebergs. Absorbing. So I've got selling, yet the buyers are gobbling up the limit or passive sellers. That is bullish. So, and where's the next target? Here. What's above here? Stops. Watch. VPOC migration. Looking good, Lewis. Feels good. Watch. Can you see rationalization of behavior? The language of the market. This is speaking to us. What happened here? Well, what's above here? Stops. We all know that. How many times have you had a stop at the high or low of the day and you're twisted upside down and they throw you, to the pavement. This is a target. Now, before I get here, do you have any questions? This is TraderLab. Are we doing good? How are we doing in YouTube? And of course, in the Bookmap Discord TraderLab community, is everybody conscious? It's been a big day, a lot of volatility, a lot of rotations. We don't often see this kind of two-sided trade. But don't forget, we have a huge report tomorrow morning, 7:30 Central Time, ETH. Wear a helmet and maybe body armor, because you're seeing incredible volatility. One of the things I've been talking about, and this is just a little sidebar, is a short squeeze and then taking out the lows of the previous 3 days, including today, or maybe not yet, I don't know, but getting under the last 3 days lows. If you look at a higher time frame chart, RTH, you'll see higher lows, three higher lows. What you've got under there is a ton of sell stops, and the potential to wipe them out. I'm suspecting, and that's all I can do is suspect, they're on the hip parade. Now, it doesn't mean they are. It doesn't mean that anything will happen. We can make new all-time highs. Nothing to do with it. It's just we need to be aware of where the participants have their stops. Just like we need to be aware the participants have their stops above yesterday's high. It's all the same. But when you have clusters of, like, shall we say, higher lows, higher lows, higher lows, and then you squeeze everybody out, if you come back, or tomorrow's report is a bit of a, conundrum, all those stops are on the hip parade. Not a recommendation, just saying. So let's watch. So right here is a target, and nobody knows. This is an incredibly explosive move. To me, it's going up, it's going into the cloud forest. By the way, I've been in the cloud forest in Costa Rica. You are literally in the clouds. You ever, the other part is the rainforest. You see photos of a rainforest. They don't show you that it rains in the rainforest. I figured out, it's rainy in the rainforest. VPOC migration, new retail price. Now, let's look at the behavior here. Now, what you need to have, and part of trade plans and edge, is not trying to get the high to low or of anything, because we don't know where the high or low of anything is until hindsight, right? Part of the joy. So if this is coming up, what I do, and I'm not saying this is a good plan, I'm just talking about ideas here, because, things, I'm only going to give you a broad stroke. If I see this and I have a consolidation, I'm seeing buyers up here, and I'm not seeing a lot of selling. Now, if these buyers are absorbed and I rotate down, then these guys are under the bus. What happens here? I have my buyers. I don't have much in the selling world. I have more buyers. Chop, chop. Liquidity comes in the book. I have my buyers, and my sellers are here. Buyer absorbs a seller here. So buyers are still active in here. Let's just see what it does. VPOC migration. Really? Boy, this is going to the moon, Alice. Let's label it. I'm labeling because I'm tracking the valuation, and it's dynamic. It changes. So I don't know, but I do know this. What is this? This is a higher time frame of this. This is sitting here. It's static. It's from the last time we were up here. And the market tends to visit high volume in all fractals and time frames. So when you're seeing these little distributions, rotations, and there's a high volume node in it, like there, which was in there, that is the same, except it's shorter time frame. If you leave it, it is saying this is too low. When the VPOC migrates, it is saying in the next developing fractal, this is too low. So that's too low. This is too low. But when we shift in this daily developing time frame, it's a higher time frame. And going up in time frame, this is a intermediate time frame. This is what trading in fractals is about. Just giving you something to think about. And if it is confusing, believe me, it is confusing, because this is a different way to think about market mechanics. It's very different from what most retail traders do. And the reason it's different is because it is not based on indicators. Remember, indicators are like the tail of the dog. They do not wag the dog. This is the market. This is what the output from the participant behavior is what creates the behavior in your indicators, not the other way around. And most retail traders come into this business thinking it's plug and play with indicators. Not so much. Personal opinion and many years of experience. Been there, done that. And again, I'm not saying you can't use them. I'm saying is, can you use them better if you understand the condition of the market and only use them when they can help you create a statistical edge? That's the point. So, new retail price. So is this, look at this here. This rotation, this price was too high in the microstructure. That's why this happened. Now, we don't know, because we could do the chop, chop, chop and break high. Well, like here, chop, 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 break high. Chop, 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 break not so much, low. Uh-oh, now what? Is this too high? That is the question. Let's watch. Now, VPOC migration. So next higher time frame, moving higher, micro time frame, too high. Watch. VPOC migration, this was resistance. Notice the check of the resistance. Notice the pullback to the higher time frame fractal. If it pulls under here, you got this. This is your support. This is your resistance, right here. Watch. See the little line? Now, this is fractal. Now, what do you do with this? I know you're asking me. So what? Let me tell you what. If I got long here, I know maybe this is too high. Why? It's an auction. It has volume in it, and we've left it. I'm not paying that. Now remember, fractals. In the higher time frame, this is too low. This is now our new retail price. So I have two things coming together. Short time frame rotation, developing time frame volume, and valuation moving higher. Look what happens right here. I want you to see this because this is how the market works. The reason this is too high, and you see the reaction, is the same reason this is too low. So one of these, right? But what do we know? Express train outside of yesterday's range and going to the moon and resistance. That's all I know. I don't know. I don't know. By the way, this could be the high of the day, right? Where is it too low? Here. Why? My buyers are active here. So I know two possibilities. This, if it gets under here, Acapulco cliff dive potential. If it holds this, we can push off. But I got to clear this. I'm spending my time so you can understand how the auction works. Watch. Too low. Cleared the volume. North. Target. What do we got here? Liquidity. Clueless. Watch. Now, and I pointed this out in TraderLab. By the way, right here, no clue. Watch. Now, right here, I've got a couple of things going on. I've got liquidity coming in, which is a fair amount higher than anything else, that we currently have in the book. Let me move this down a little bit so you can see it. I have a target right there. And I'm going to say, is it a coincidence? Not in my book, maybe. Because there is no precision in trading. Write this down if you haven't thought of it. Horseshoes and hand grenades. If it gets close, it's a direct hit, you know? So right here, I see an iceberg, and I thought, okay, fine, you know, I don't care. And I see my buyer. This is the liquidity marker. It shows adds and pulls. I'm going to take it off so just so things are a little clearer. But I use it in my trading. Just adds a little spice. You know, it's like a little paprika. And so here I have my buyer and I have absorption. The absorption was this selling iceberg, just so you know. Okay, so I know that. So, and this is not a reason to get out. It's a reason to put your antenna up and go, what's going on here? Watch. So when these guys interact, it's what happens after the fact that's very important. And what can happen is when you have an iceberg, it could actually go below it and then come above it, or never. You know, it could just be the end of the planet. Right now, this buyer right here, these buyers were absorbed. Watch. No way to know. So what do we know? This was resistance right there. There's an old saying in trading, resistance becomes support. We go up. VPOC migration. Right here is my VPOC now. So that's my retail price. So what does it say? Remember, language. Let's look. So right here, off to the races, having a wonderful time, you know, don't know, right? If I knew, I would sell the high of the day, wherever it is. I don't even know where it is. So I don't know. So I'm managing my trade. Too low, retail. Clear this. It was resistance. You can see how resistance works, how they sandwiched in. Oh, too high. Oh, too low. Resistance. Take it out. Going to the moon. Support, support. What do? Break under it. Have we broken under it yet? No. First time. What happens? Where do we come back? To this from below, to this from below. Time to blow the canopy off and get out of Dodge. And if you were not, quote, sure, which nobody is sure of anything in this world, here, you'd be, I'm out of here. Because this is kind of the last line of defense. Why? Buyers were here. So if they're going to defend, they would be in here. So, but in TraderLab, this is a exit or a short, but up, you know, neither here nor there. Any questions? This is the sequence of the longs. CVD. Can you show the setting on the CVD? Show the setting on CVD. Well, CVD, I'm not sure what you're asking me. All it's doing is CVD, chart volume delta, is only showing me the delta, the buys and sells, you know, the aggressors, I should say, based on what's on the chart. So there isn't a specific setting for it. It just measures whatever's here. What I'm seeing here, this buying, is delta, and you could see it right there. So that's what it's doing is taking the sum of, and if I zoom out, you see it's still showing me the 306 that went off over here. But if I bring more in, it just shows me more stuff. You know, I hope that answers your question. There is no real setting for it. How do I add the CVD? Do you have Bookmap? You know, I think that's really more a knowledge-based question. It's pretty simple. I'd like to kind of for the stream here, since I have limited time, I'd like to stay not with customer support things, but just go to knowledge base. It's real simple to add. Or just come to TraderLab chat and post in there, and then you'll get loads of assistance. But in the stream, I really can't get into that because this is really more about how to trade. I hope you understand, and forgive me for that. So this is absorption. These guys get trapped. No way to know. See, the thing about this is we don't know what will happen. It's just part of the joy of randomness. But we can identify locations of potential behavior. This needed to hold this. Break under. And now here's the other part of it. It needs to come back above it. And what happened here was not so much. Okay. Now also 9 a.m. I think we had a report. Can't remember. It seems like a long time ago. So down we go. So you'd be out of the long. And I don't know about getting short. You know, for me, it was just get out of the long. I can't turn the barge around that quick. Because for me, what I'm doing is I manage my trade. Now let's go look at this. 9 o'clock's the report, right? So probably or potentially this is the exit in front of the report. So let's look at where we come. This is my opening swing low. Remember that? We were putting it on the chart. What's at the opening swing low? Stops. If you get the Acapulco cliff dive, you take out the VWAP, the mid, and I'm seeing absorption coming down. Now, this was a heck of a surprise. I'm going to tell you, I'm going, what is going on? Have you ever asked yourself that? What is going on? I was going, what's going on? I know there's a report. Is it that significant? But let's look at what we know. We know under the opening swing low, which is why we always record it on our chart, is stops. So we're jumping out the window, and the thought of getting long is difficult, to say the least. But let's watch. So it comes down. Sellers, they're getting absorbed. Sellers, that's the red bubbles, they're getting absorbed. 900 sell stops come out. 400 more. That's about 1,300 sell stops. What do we see? Buying iceberg over 1,000. That is meaningful. So let's watch. Now, right there, I'm going, oh, it's the end. It's over. I'm looking for it to keep going because I have targets here, right? And I have a target here. So I'm thinking, oh, this is next. So I wasn't able to get short. I'm just sitting there like a deer in the headlights because I'm going, what's going on? Literally trying to figure it out because this is not based on the opening drive, which was drivey behavior. In other words, open and go off like a bullet. That's the start of a potential trend configuration until it changes, of course. And that changed with this. So right here, I see the absorption. I have sellers and I have buyers in that. Okay, so we're putting all these pieces together. Right here, I have my buyer and I have my sellers, and they get absorbed. So these guys now potentially are under the bus. There's my buyer. And I'm going, what the heck is going on? So now I know these guys, this here's my support. And here's my micro high volume. Let's watch. And I'm back above my variable high volume node. Let's go take a look at it. Come all the way back up. Now I'm sitting here, I'm going to tell you, perplexed. That's all I can tell you. So what happens is now I did not take this because I was in a state of what's going on. I don't mind telling you that because I don't have to trade. I'm going, well, this is kind of an anomalous behavior. I see a long setup here. I pull back to my VHVN and I see absorption. I read this as a long. And my resistance is this. Or actually, any of these coming up, I should say. Here, here, and here. So we get actually to there, this one. I see sellers. I see absorption. I've got my mid and my VWAP. This is shifting down. This is suggesting maybe this is too high. So I'm confused. I go, I'm going to wait. I don't know what's going on. So I come up. I take these guys out. Stops, liquidity in the book, absorption. I see my absorption here. And I'm going, this is really wild. And I hit this on the head now. Okay? Got near it last time up. And you would think, possibly, and that's the term, that this would just keep going. Well, right here, I see my absorption. I have my icebergs. I have my buy stops over the last swing high. And I'm looking at it, and I posted in the, I think it was this one, absorption. And then what do we have? This thing is bouncing all over the place. VPOC migration. I'm going, okay. Absorption. What do we do? See if this doesn't look somewhat familiar to you. Absorption. Break. VPOC is here. VPOC migration. VWAP to VPOC. By the way, I took this thing. Right, okay, I got to take this. Because at this point, I'm thinking, well, I know I got absorption here. So I took this to here, scaled, and then I'm holding it for potentially take these guys out. So this actually was here, and I took it to there. And then right here, I think I'm, let's just say, home free. I got my buyers here. I'm getting above my resistance. I'm above my variable high volume node now. And I got to clear this. This is what I have to clear. So, and I got to get over this, of course. Not so much. I get taken out. Okay. So now I'm just going, wow, you know, this is really something. Let's watch. Once you break under these, and this is hard, I'm going to tell you, this is a very mixed bag for me. Once I break under VWAP in mid, this was a short. I got this one. And then it sets everything up below us. I mean, this is like the shorts got lambasted early. Then the longs got lambasted. Then the shorts got lambasted. Then the longs are on the hook again. Once I'm below the mid and the VWAP and variable high volume nodes, which is here and I think here. Haven't kept up with them. Yeah, here and here. Let me label this. I use these high volume nodes as support and resistance. And the reason I use them, and it doesn't mean I buy or sell them. It means I want to see the behavior, because what they say is what was a valuation. So like here, this is too low. Well, this is too high. Chop, chop, chop. Too low, too high, too low, too high. Whichever way it breaks, and here it looks like it's going up. But what's my resistance? The absorption up here, you see? So I think at this point, all's good on the Western Front. And here, when I break below here, so right here, when it comes down to this, I'm thinking, okay, potential back to here or here. So that's what I was thinking. I didn't take it, and the reason is, I'm kind of a first time's the charm kind of guy. So here to here is good. But what's under here? Stops. What's under the mid? Stops. Where's my location to observe? There. So let's watch. Break below. Liquidity comes in the book. That's like my backstop if they don't pull. Right here, I get my buyer, and it looks like going to the moon, Alice, except liquidity, variable high volume node, resistance, mid, selling iceberg, short, then what's below us? Overnight volume point of control, high probability, naked volume point of control, high probability, and there's another one. Well, overnight mid, but this is the primary target. And what is this? This is the retail price from yesterday. What is the market doing? It's a shopping experience. It's valuating. If what's above us now is too high, then we can come back and check yesterday's price. Is this too low? It's a target, and there's probabilities associated with this. So anyway, that's the short. That's the last trade I got to take because of the stream. This is a target. This is a target, and I was done. These are structured trades in the TraderLab. So, you know, you could get buffeted around in this stuff, but the idea of the TraderLab, subject to the fractal you trade, is to try to catch this kind of move. Because, you know, if you're in, and, you know, so let's just say you go to 32 from here. That's over 10 points, plus scales. So you would be looking for this for scaling, or this, up to you, and this. That's the trade. Then it's done. You put the car back in the garage, dust yourself off, go to breakfast. There's more. Now, we have another structured trade in the TraderLab. It is called, well, before I go into the long, which setup, questions. Thanks for your patience. Yeah, Tony, if you can't find that, go over to TraderLab. There's a link in the bottom of YouTube. And I'm sorry, I can't see the screens, the chats until I stop. They're on different monitors, not where my streaming setup is. I've got a lot of monitors running around here and stuff going on. So be sure to check the knowledge base or go to the Bookmap Discord TraderLab. Use the link in the bottom of YouTube, and you can get help in there, because that's what the community is for. Questions in YouTube? Oh, great. Good, Tony. And hey, welcome to TraderLab if you haven't been there yet. And by the way, Tony, there's a library of webinars in there. Start with the primer webinar. It gives you an overview and foundation of what this is about. It's got over 29,000 views. Pretty popular, I guess. And the other thing is the TraderLabs, there's no cost for the TraderLab. It is a community of traders. Remember, I'm talking from new traders to old dogs. And I'm not the oldest dog in the TraderLab. I'm going on trading 45 years, both professionally and now, you know, like you guys sitting out here in the ozone somewhere. And our senior trader has over 50 years, and he's active, and everything in between. The thing to do to come to TraderLabs, click the link in the bottom of YouTube, but ask everyone, come to TraderLab. You don't need to do these subscription things unless, of course, you find value and you get some benefit naturally. But the thing about it is, most of what is out there is in the TraderLab. Anything that's in the retail space, everybody's gone through before you. Everybody. There isn't anything out there, any little derivative that somebody tried and that's going to make it better. It doesn't exist. If you can accept that what's in your toolbox and the time frames has been done by everybody else, and the failure rate of retail traders is astronomical, all you got to ask yourself is why? Then maybe it's not about the toolbox. Maybe it's about understanding how the market works, which most retail traders never get a chance to understand because they're focused on indicators translating behavior. And then they're in an environment of random outcomes because of random inputs, and they have winning trades with a defective process that has no edge. That is the conundrum And that is where we go off into, basically we go off on these, I call them a trader groundhog day. I coined the phrase because that's what was happening to me. You get the aha moment, you feel pretty excited, and then it doesn't work, or it works but doesn't have an edge. The problem with not having an edge with something is they all work. Gamblers walk out with cash. It works, but over time, the house extracts the dollars from the gamblers. What makes you think trading is any different? Just ask it. Anyway, target out. Now, we have a couple of possibilities in TraderLab. We have two opportunities. One is a continuation trade from here, and let's look at the profile. These are distributions, and what it represents is consolidation. You guys know what a consolidation is. It's a block of volume. Let me see if I can do this without causing damage. I never know with these things. I'm going to try to outline this for you. Sort of, like as best I can. So this is a consolidation, and here, okay. So chop, 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 chop. This is what your consolidation is, right? And what happens in a consolidation, inside of it, I'm going to draw this out for you. I just want you to see some stuff. I try to do things a little differently, keep you from passing out. So look what we've got. Chop, chop, chop. And what is a consolidation? I'm not paying that. Yeah, but it's on sale. Absorption. And then here's the high volume. So the volume in this, and you could see it right there, because this is only showing me what's on the screen. Okay? High volume node. That's like retail. If this volume in here is too high, it becomes resistance. You've seen this before, and we can break away from it. Now, therefore, this outside edge here is an outside edge, and this creates the low volume. Low volume zones are like resistance. Why? We ran through it. Urgency. Now, here's the other thing about a low volume. You've heard of high volume nodes, maybe low volume nodes. So that's a high volume node. These are high volume nodes, these VHVNs, HVNs, they're all, and they're basically in a consolidation where the volume took place. And if you leave it, this is the same as the break below a VPOC that I showed you up top. I'm not paying that. Yeah, but it's on sale. I am not paying that. What do you mean? I want this at this price. It's on sale. I'm not paying that. And they leave the store. The urgency of leaving the store and the sell stops that are under here is what creates this. 909 stops. Thanks for playing. Broker sends you a gift basket. Now what? Low volume. What the market tends to do is come back in a couple places. It can come back to high volume. Is this too high or too low? The other part is outside edges of consolidations have stops on both sides. If you have low volume, the market can come back up into it, auction it, and continue down or squeeze through. And then that tells you the current distribution might be too low. We don't know, okay? Except we got our target, which is high volume. No way to know. So let's look. Look what happens here. See the behavior? Where do I come? Outside. To what? Low volume. The right here is resistance. Right here. Now, there's two possibilities. And unfortunately, there's always two. This is called the initial balance low. So the possibility is we come up here, pick some stops, there they are, and we continue down. That's one. That's a TraderLab structured trade. The other possibility is and I had absorption here, so there's shorts here that are under the bus. if I get short here, I'm just giving you how I think of these things or how I operate, not saying it's a good idea. I'm just saying it's one way to think about it. I've got my buyers here stuck. I've got my sellers here. There's the absorption. Stuck. I've got my location here. Helmet. So this is resistance. This is support. If you sold this, this is where you got to scale. And what's down here? Let me show you. I'm in fractals, guys. This might be too short time frame for you. I'm going to show you this, though. Watch. See if you don't see something familiar. You can organize market mechanics thinking in a certain way. This is where the sellers are trapped. This is where the absorption took place. This is where the change in behavior took place. Coming up on this side, I've got my buyers. I got my low volume here, and I've got my sellers were here. My buyers got absorbed. I'm in my low volume outside edge. I have a location called the initial balance low. This is called the initial balance, the IB continuation trade, but there's your obstacle. Okay, I'm putting this together so you can kind of see it. And I hope you find this interesting. So let's look. Support, resistance, right? Watch. Resistance. So too low. And by the way, here it looks like it's going to zero. What do? All I do is I'm testing this absorption and this micro high volume structure. Think of Russian dolls, fractals. This is a midget. This is the little Russian doll, high volume. It acts the same as that, except this is higher time frame, highest volume from yesterday. This is a fractal. So the market is actually it's like a Russian doll. They're doing it inside of each other. You know, it's like you got the intermediate time frames, a big doll, and as you go down in time frame, but market mechanics are generic. If you understand, now we don't know what'll happen here. We do know this is too high. We do know this is too low. If I get below here, going to zero. If I come under and come back above, that is a rejection. There was absorption. And these sellers are joining these guys being absorbed by the passive side, which we can see them at times, but other times you have to deduce what's going on. If you see an aggressive seller, by the way, what's an aggressive seller as it shows up in Delta? Sellers are market orders and sells stops are market orders. We can't differentiate if it's an initiator or just somebody jumping out the window on a stop. They're both aggressors. So the delta is showing us these sellers and then the rejection. So here's my resistance. Notice when I come up that it pauses here. It pauses here. Why is it pausing? Because in the most micro time frame, it's resistance. And I had absorption here, these buyers. So that's resistance here. So I can look at this and go, if this is going down, it's going to do it from here. What does it do? It breaks above. Now, watch. As soon as it breaks above, the trade is over if you were short. The other side of this is, as soon as it breaks above, right here, what does it do? Where was resistance? It was here. Right here. I'm going to put a line on there for you. Now, I'm not suggesting anybody do this. I'm suggesting you think of the market in a different way so you can narrate it. So let's put our resistance in. Remember, too high, trap buyers, they were absorbed. Here, trap sellers, they were absorbed by the buyers. Who's going to win? Notice the resistance. Notice the resistance. Break high. Absorption. Two pieces of absorption. I want to show it to you. Here, you see the seller, the red bubble, and they're absorbed by the buyer. Right away, I see a seller. They are pushed out. I break above resistance. I pull back to it. So right here, I know these sellers are trapped. Of course, these guys are not having a good day. The aggressors were here. You see the change in behavior? So I had aggressors here. I had sellers here. This is the fight. I get my buyers come back in here. Now, one side or the other is going to win. We don't know which one. And right here, it looks like the sellers are still doing a good job. There's the last shot on goal for the sellers. Here, they get pushed out. Here, we pull back. And it's like, and this here is where your absorption was. So this is the undercarriage, if you will. And that's a long now. This creates something called the IBF, which is a mean reversion trade. And the idea of the IBF is to squeeze out mid and VWAP. And this is our resistance. Let's just see if we get any behavior. Oh, there you go. Well, now we're current, guys. Questions? Thanks for your patience. Is that Prashant? I hope I say it correctly. Forgive me if I mispronounce it. There's a link in the bottom of YouTube. It'll take you over to the Bookmap Discord TraderLab community. There's no cost. And there's a library of webinars on this, which you can watch. Start with the primer webinar. It gives you a high-level overview of what this is. This takes time, like everything, because it's language. It's like learning to speak language of the market and versus indicator driven. Okay, I don't use indicators. What I do is I'm using the behavior of the participants. So this is a structured trade in TraderLab, this long, and then you're going into the stops here. So this is the targeting. Now there's other possibilities. Let me show you. Now here's something every trader has to determine. What's your trade? Is your trade here to here, and that's the end of it? It could be. Because what's sitting here? Stops. Who got short? Remember our short from here, which was the last short into this? Then what did we have? Potential short, and it tested the low. Too low, break high, long. Where's the stops? Above the mid and the VWAP. That trade would be over unless you are trading out to this edge, which you could, back above this swing. That's a different issue. Does this make sense? So what is the thing? You have to identify when I say you, I mean the collective us. We have to identify our trades. I like to trade into stops because I know where they might be. In fact, I know where they are. Everybody, retail traders, puts their stops at the mid and the VWAP. They trail, right? If you think it's going to zero, where are you going to have your stop? At the mid. Where are you going to sell? At the mid. Why am I going to scale ahead of the mid? Because I anticipate selling here. And they might be right. My trade goes from here to there, and I'm done with it. It's my trade. Your trade might go out here or wherever because it's your trade. I find my job is to trade into the other side, which is retail traders. I want to trade into the stops because I know where they are. I don't know what'll happen, so that part, not so much. Variable high volume node. This moved higher. Now there's a couple possibilities. We take this out, then we can come up back to this swing. If I'm trailing a stop, this might, here's the thing about it. There's high probabilities of something happening, and then there's tertiary things of what might happen. I'm a little bit more about get the swing, get out of dodge, ring the register, and it doesn't matter if it goes here. It's not my trade. I've added more randomness in my equation. What I like to do is not do that, because then I'm going to have all kinds of emotional responses. Oh, you should have held it. Oh, no. Or if it only goes here and fails, I have a trade management process. And then I'm saying, well, I followed my plan. If I have things that aren't anchored as part of my trade plan, I'm always going to be changing it. And then it becomes inconsistent. And it's just psychological, because then what happens is, suppose I didn't take my profit here and I'm holding for who knows where, and then it comes all the way down. Mentally, I'm going to be thinking the market owes me this. I should have got, or I get out here and it goes here. Well, if I don't have a committed process, psychologically, I'm going to hurt myself, because I'm going to think the market owes me something. And then I'm going to say, if I'm going for this and I don't take this profit here, then I'm going to say, well, and it comes down here and I'm out. What's the difference in the profit? 4 or 5 points? Now I'm looking to get my $200 back that I truly never had. I don't know if that makes sense to you, but this is a psychological game. Does this make sense, by the way? Mike, I'm getting a question in the Bookmap Discord TraderLab community from Two-Lot Tony. Two-Lot Tony is working on becoming 10-Lot Tony, but it's one lot at a time. Is the microcomposite VPOC to VWAP a decent trade in this context? We're talking this? Yes, but it's a target. So you got to decide, are you going to trade the long from here to here, or wait to take the long from here to here? Either one is okay with me. The thing I don't know, of course, is, are we going to get here and maybe here? Because these are viable targets. This does not have a high probability, but I can't rule it out. So for me, the trade would be from here, but it wasn't for me, because I can't turn the barge around that quick. In other words, I can't reverse here. I'm targeting. When I'm targeting something, I'm not looking to flip, because I can't tell where the bottom of anything is. So I'm just targeting this. It could have gone here or kept going, right? So I can't, I'm just talking about me. I'm sure there's others that can do that very effectively. So, because my next trade is a continuation trade, but this is my support, you see? So I know if I got short here, I got to get under this, which we didn't do. We tested it. We came back. Once you come back above it, and this is resistance, I cannot get long here. I get long here. I'm okay with that. But there, trade's done. And now whatever it does, it does. It's like your bus. You get on the bus, you get off as your stop. And then you wait for the next bus. That's your bus, or vetted, structured trade. So Tony, I don't know if that answers your question. You're asking me if I could have. Well, if it's part of my plan, I should have. If it's not part of my plan, I don't. If your plan, then yeah. For me, I can't. I am right here. I see the absorption, but I know here's how absorption tends to, well, it's all random, but I know these guys were absorbed, these sellers. So that's a buyer. I know that. Okay. And 463 stops. Wonderful. I know the market, and I have sellers here absorbing these buyers. Exhaustion here, absorbed. So look what I've got. Look at this behavior. You guys should, in TraderLab, screenshot the behavior. This is what you've got to be learning, studying. Now, we don't know how it will resolve. What we know is this is material, that is material. That's what we know. And this behavior is material. That's why right here, and I got the low volume, remember? And I got this outside edge of distribution. So this right here is a big deal. This little thing down here is too low in the microstructure. It's right there. That's why I drew a line through it. And I had my buyer. Tony, I'm going into this because I want you to understand. Was this along here? I have a hard time with that as long as I'm under here. Okay? And so I can't, for me, I can't buy this. For me, I cover here. I know. And if I break below here, then, it goes lower. So I can't do anything. I trade the targets. If the trade kept going, I'd be looking for a continuation trade or not, or I'd just be done because this was my target. So, Tony, I don't know if this is answering your question. You're asking me, could you? I'm going to say you can. I can't. Others can, and because it's just my plan. That's all. And I don't care about that. I know that if I come out in here, then I got this. That's what I know. That's all I know. And that's my target. That's my trade. See? Done. Off the bus. Time for lunch. Did that answer you? Yeah, I couldn't either, Tony. So, unless it's your plan, right? Anyway, so that's the IBF. There's two setups here, guys, if you're visiting in the stream today. This is a potential short. It's called the IB continuation trade. If I took this, which I wouldn't, but I'm just telling you, if I did, or I was staying short to go for further targets, that's okay too. But I know this, if I can't get below this, I got a problem. That's what I'm saying is. So let's think of this from many angles. It's not a long, it's a target. Then if we come up here, it's a potential short. It has to go below this absorption. And it does, I think, for a tick or something, right here. So the exit is right below this thing. So that's where the exit is. In here, I always get out a couple ticks ahead of it. It hits resistance, outside edge, IBL, which is the IB continuation. There, and we sell off and we make a new low. Do you see why this is so important? And then we come back. So I'm back to my resistance. Here's the deal. I can't buy it. But when I see the resistance go, now it changes. That's back. Anyway, long-winded explanation, but it's very important that we understand market mechanics. Variable. Now, I have nothing to do here. My trade's over. If you're higher time frame oriented, you could be managing the trade. Let's look at this in fractals. What is this? Retail. VPOC migration. Too low. Where do we come? Too low. This is a possible long in the TraderLab or not. Where's too high? Where's the swing? It's here. This was the last short. What's above here? Buy stops. What else is out here? Low volume note. I would not be taking this. It doesn't mean you can't. I mean, this is a structured trade, but now we're in a fractal. But remember when I mentioned early on, I said, where's the stops? Now, my target is the stops at the mid and the VWAP. If I pull back and get VPOC migration, now, here's a problem with the trade. I'm going to tell you it's a structured trade. I can't take it for a couple of reasons. One, the major reason is this is my obstacle, and so is this. So if I get long, I can't buy this. I'd love to tell you I can buy it. I can't. I get long here. I got a scale here. I got no range. Make sense? But what I can get out of it is reading it and narrating it. Where's my swing? Let's remember. And where was too high? Here. So I can come out here. So this to this to this. Let's see what it does. Questions? And thanks for visiting TraderLab. By the way, guys, give a thumb up. And remember, these streams are available exclusively to Bookmap Discord TraderLab participants. Remember, the TraderLab community, there is no cost, and you can access all the education that's available in Bookmap. Stocks, options, crypto, order flow with a high tier tool like Bookmap, swing trading, algorithmic behavior, options, and much more. Market maker behavior. All of that's available. And there's a lot of streams being done by different traders with different approaches. There's no one way to trade or a right way. But we know what the way that doesn't work is, and that's gambling. Gamblers do not stay in the business, and I think that's reflected in the 90%-ish of the retail traders who fail. They don't have longevity or sustainability because they're really gamblers. They just don't know it. And that's because of randomness. It really fools us. So this here cannot take that. Because of range, not because of anything else. Now, let me point something out to you might also find interesting. This is a structured trade that is not qualified because of range. The auction, this behavior is generic. The market mechanics do not care about what we need to qualify a trade. If this was out here and that was sitting there, it's a trade I take. But the behavior is auction based. The range is risk reward requirement. By the way, this is absorption here. These buyers were absorbed. See the selling iceberg, see the absorption. So these guys ran into a wall called an iceberg. If they can't absorb the iceberg, then what do you get? You get this iceberg. So what you had is sell stops, support, absorption, move north. What do you run into? And you never know. Iceberg, absorption. Now what? Potential trouble in River City. Where's your support? Here. Where's your resistance? Right now, it's this thing. Now, here's the thing about this. How do you know this is going to show up here? This was the target, by the way. And it doesn't mean it won't get there. But here's the deal. My thing, at least what I share in TraderLab, and I try to, I mentor and coach, obviously, is you got to get risk neutral at the first obstacle. That's why there's no range. You can't take the trade. So you need more range. But let's just assume this is out here someplace. So you take this trade, you get risk neutral. Then you manage the trade. So if it comes all the way back and it fails, the worst that happens is you scratch. If you scale. On the other hand, you put the trade on, you don't get scaled, you take a full stop like the rest of us. So let's watch the behavior, okay? So if you're in TraderLab, and let's just assume there's enough range, you'd be sitting risk neutral, your stop's under here. Where does the trade fail? Under here. So let's watch. I have sellers here. They absorb these buyers. Now, the tendency with this stuff is to come back and check or not, or just fall out and it's the end of the trade. I have sellers here. See the absorption. So let's watch. Any questions, by the way? I've got about 9 minutes, and it's always wonderful to visit with all of you. Please give a thumb up in YouTube if you're getting something from this. Feel free to leave comments in YouTube, anything you'd like me to go over for future streams. My time is limited, but you can get a lot of ongoing support, narration, pre-market input, ad hoc audio inputs in the Bookmap Discord TraderLab community. There's no cost. So I think that's pretty good. And as long as there's no cost, I was going to say go for it. Notice the behavior. So remember, too low. This is where it fails. Sellers, absorption, got to get above these guys. Target, helmet, TraderLab. Sellers, what happened here? Too low, there's your buyer. Resistance, got to clear. Get above, where's my stops? Let's go back. You got to always look left, this swing. Where's it aligned with? This. What's my target? This. Notwithstanding the range. Is everybody following? This is TraderLab trading. Now, here's the other part of this. You could trade anything you want to trade as long as you can determine you have an edge. Can you do this? If you can understand and translate it, you'll understand how the market works. That's why I don't need an indicator to do this. And the outcome of all trades are random. It doesn't change, from except in the TraderLab, it's about only interacting when you have a statistical edge, not just clicking the mouse for something to do because you're bored. The casinos don't play games that don't have an edge. They just sit back. If nobody shows up at the table, they're not going to make up a new game. If a gambler walks out with a suitcase of cash, they don't change blackjack from 7 to 10 cards because they don't want to lose again. They don't skip the next hand. They don't do anything different. That's how they succeed. That's a business model that works. It's proven. Instead of creating a new wheel, as they say, reinventing the wheel, does it make sense? Maybe we just drive in a track that's already proven and use a process that emulates a successful business plan. That's what the TraderLab is. If you're not satisfied with what you're doing and you keep waking up, tuning, tweaking, curve fitting, and getting the same results, you're experiencing Trader Groundhog Day. In fact, I did a webinar on that because we all do that or have done it. I don't do it. But many traders are saying, gee, I could have got this, I could have got that. Let me look back a month and look how well that worked. And then it doesn't work. Why not? Because it's random. The human mind sees patterns and thinks that somehow there's an edge in a pattern. Everything works. That's the point. In fact, back in the day, I was sitting on a trade desk. We had a dartboard. The problem was if things were not going well, you don't walk in front of the dartboard. But it would be buy, sell, hold, that kind of thing. It was just, it was for traders or investors, And, or the Magic 8-Ball. We had one of those on the desk. What's the difference? I've seen software that was astrology-based trading systems. When the moon was in Uranus, you would buy. Or whatever it was, if you know what I'm saying. And people bought that and traded with it because they figured human behavior is affected by the moon and the gravitational pull and the tarot cards. Come on. I'm just saying, right? So, and that works sometimes. Just giving you something to think about. This is what the TraderLab is about. Helping you understand the business of trading, how you might get in alignment, how the market works, why it does what it does, how you can use a high-tier tool like Bookmap to see inside. Most retail traders don't have a clue as far as how to use order flow and how to get an edge with it. Do you think order flow might give you an edge? Can you see how I'm using Bookmap? Do you think that might, and the auction, and no indicators? Something to think about. And where's our target? Just want to remind you here. Why? That's the price we fell away from and it's an outside edge. It's the same as this outside edge of a distribution. And what's that outside edges? Stops. If I'm now in this distribution, where's the outside edge? Out here. What's out at outside edges, you ask? Swings, low volume, stops. And just to put a little icing on the cupcake, variable high volume node. That's why this is the next target, not a trade recommendation. Thumb up in YouTube, and please remember, you're all welcome to visit the TraderLab community, and no cost naturally, and there's a link in the bottom of YouTube. And remember, these streams are available exclusively to Bookmap, Discord, TraderLab participants for screenshots, circles, arrows, review, and the rest of it, so you can build out a business plan. It's one structured trade at a time. There's 60 PDFs of these trades you can download, and I always caution everyone, you got to pick one and prove to yourself that you can actually do this, that you can manage your emotional states. These are this was actual trades, and these were done in 2020. I'm not a vendor. That's why there's no cost for this. I'm just like you. I've just been doing it going on 45 years. And I've done everything you've done, and probably a lot more because I've had more time, you know. And I would like to say I wish I could capture the time again that I wasted, but I didn't know. I had a belief that I was always on the right track. It just needed persistence and make it better. And why was that? It was Trader Groundhog Day. The random outcomes of gambling made me think I was on the right track, and I just had to make it better, right? Does that sound familiar? Well, that really wasn't the truth. I was misinformed. I did not understand gaming theory. I would just look at my P&L, and I would see it go up and down, up and down. Things would start getting nasty. I'd curve fit, tweak, fix, and then I built trading systems where they would optimize very complex mathematical processes because I thought that I was on the right track. I just needed to make it better. So yeah, I made it better. What did I make? I made it more of a Trader Groundhog Day, just more high tech. So anyway, no more. Anyway, these are available. Come to TraderLab. You can download these as long as with the you'll have the library of webinars. I suggest you start with the primer webinar. Take it one step at a time. When you come to TraderLab, again, use that link in the bottom of YouTube. Before you do anything, ask the other traders in the TraderLab, what would they do if they were starting over again in TraderLab? Which structured trade would they use to start with, to learn a process and to develop an understanding of market mechanics? Please give a thumb up in YouTube. Thanks for visiting the TraderLab. Look forward to seeing you again. And remember, these streams are available exclusively to Bookmap, Discord, TraderLab participants to reverse engineer, review, screenshot, circle arrow, and the rest of it. And you're all welcome to TraderLab. Thanks so much, guys. Look forward to seeing you tomorrow. Remember, we have a big report in the morning in the ETH. I'd suggest wear a helmet for that. It's going to be a biggie. The other thing is, the last several days, we've had higher lows. There's a lot of sell stops stacked under there. Doesn't mean we're going to go there, but just think about it. What does the market do? It goes up to go down. Market goes down to go up. And it does that in a rotational pattern because there's stops always on outside edges. Think about it. Just be prepared. Have a plan. And I look forward to seeing you guys tomorrow. Take care. Thumb up on the way out in YouTube. And thanks, as always, for visiting the TraderLab.